Good morning, everybody. Welcome to the National Real Estate Post, the NRP Daily. Frank Ray here, and I have an interview for you with David Stevens, where there's some wonderful insights on the CFPB and HUD and down payment assistance under the new Biden administration going forward in 2021 that I think you're all going to be very, very happy to hear. So please tune into that. But before we get started, I want to let you guys know something, especially our mortgage originators out there. I know you guys want to keep the ball rolling in 2021. I know you're feeling like you're going to see refinances kind of taper off just a little bit, but I want to give you a heads up on something. Commercial lending is going to explode. I know that your thought there is, I don't know how to do that. The good news is you don't need to know how to do that. We've got commercial lending coming your way with NREP Business Lending this month, where we're going to make it extremely easy for you to do. So I just want you to stay tuned for that and continue to tune into the NREP show daily so that you can learn more about it as it develops, but it'll be out this month. Commercial lending made extremely easy. Now let's get to the interview with David Stevens. Well, welcome everybody. I am here with David Stevens. Once again, Happy New Year, Dave.
Happy New Year, Frank.
Thank you very much. Hope all went well with you. So I wanted to get you on here, Dave. That's the beginning of the year. We hadn't talked to you in a while. And I just, we've got the new administration coming in, and there's a lot of scuttlebutt about stuff going on out there right now. I even saw where they're considering, instead of conservatorship for FHFA, they're saying, well, let's just make them one entity and go from there. I've been, seeing some things, but I guess what I wanted to ask you about is with the new administration coming in, looking at 2021, it's like, what are you hopeful for the mortgage industry going forward, and why?
Well, yeah, I mean, it's good timing to do this because it's kicking off a new year, and as we all know, in the mortgage business, you're only as good as your last loan. So we're starting with a fresh slate, right? So let's start off with some basics, right? So I came in with the Obama administration in 2009. We were coming off the worst recession since the Great Depression that had been created by housing and the mortgage industry, right? It was our industry that almost took down the world,
right?
The world's economy. Sovereign governments like Ireland and other nations invested heavily into the U.S. mortgage market in what was considered to be a no-lose investment in the MBS space. A lot of it in PLS, a lot of it in credit risk tranches. We had subprime, we had negams. You could go to Countrywide, which obviously no longer exists today, and get a fog the mirror 80-20 negam first with a second, and get approved with just a FICO score. So
there you go.
I think it's a very different world. So that was a housing crisis that created a national recession, and it started with the Bush regime responding to it, but then the Obama regime took up most of the heat, and they responded with, we got to make sure this never happens again. So we all spent that decade going through endless series of implementing all the rules. A lot of it was required under the Dodd-Frank legislation, the development of a new regulator called the CFPB, all this weight. And so it creates paranoia. It freaks us out when we see, okay, here comes another round of Democrats coming in. It was Obama's VP. We're going in for round two. Well, that's just not the case. This recession is a pandemic brought on by a virus. Our industry has nothing to do with the state of the economy. In fact, as the Biden team recognizes and knows, and I'll acknowledge that I obviously was supporting the Biden team and on a couple of committees and things of that sort, I would just say, they're looking at this very differently. They're worried about housing affordability. They're worried about access to homeownership for minorities. They're worried about safe, secure rental housing. But when it comes to the mortgage industry, we're a bright spot. We're a shining bright light in what otherwise is a pretty rough economy. We've been booming, and we've put billions of dollars in the hands of Americans across the country as they refinance their mortgages into lower payments. And we've allowed a lot of people to come out and buy homes at record low interest rates. And we've had, as we all know, a huge demand for housing, primarily driven by millennials, but also retirees. So very different story, and you should expect a very different response. In fact, President Biden, if you want to look at his website, he has a housing platform called Investing in Communities. He's the first candidate running for president that's actually had a housing platform. Obama didn't have one. Trump didn't have one. I don't think Bush had one when he ran for office. So we'd have to look back pretty deep to find anybody who had an actual housing plan. And in the Investing in Communities housing plan, he actually calls for ways to do more business, right? The first time homebuyer $15,000 tax credit is in that plan, and a lot of other things as well. So my sense of things here is that you should expect that, frankly, we're not going to be an area of focus. That's a good thing and a bad thing. I think it's more of a good thing. The focus will be elsewhere, and you should expect that from the Bureau. I mean, Kathy Kraninger, who was a Trump appointee, a nominee and confirmed by the Senate, and has done a fine job. I'm not, no issue, but she will be going because the Supreme Court said that you can now remove that person at will, not for cause. They determined that our for cause requirement was unconstitutional. And you can be certain that the Biden regime will remove her. Elizabeth Warren would demand it, and others that helped create that bureau in the first place. And Biden knows IOUs where they lie. So expect a regime change there, but don't expect them to be coming after the mortgage industry. We did all that. We implemented all these rules over the last decade. Payday lending, maybe. Maybe making sure servicers treat borrowers coming out of forbearance well, but that will be just making sure that the rules are being followed. And then, anything sort of on the predatory scale, student lending, that kind of thing, that will clearly be the purview of a new CFPB. I just don't think, frankly, we don't have the issues where we're highly regulated, we're better run, we're doing all QM loans. We underwrite more safely and soundly than our industry has ever underwritten. And I'm now looking at almost 40 years, just shy of that in the business. So, that's sort of at a high level. We could talk about each of the various regulators, Treasury, HUD, FHFA, and more, but I'll stop there for a second.
That is good news. Because I think a lot of us out, on the streets in the mortgage industry we're concerned, very concerned about, a new administration coming in and, swapping out, the head of the CFPB. And because, under the Biden administration, especially with Richard Cordray, they were so heavy handed, they were just really coming in on mortgage companies and just, not even, there wasn't a lot of clarity on certain things. And it was hey, you're fined. And, now, the rules kind of a stance, and so I think there's a lot of fear that that's going to happen again, because I think a lot of people in the industry feel like it's kind of a money grab, for the CFPB in certain, in a certain way.
Yeah, I honestly don't think it was ever a money grab.
No.
Like, you can yell, your watchers can yell at the screen at me, but I was in there, man. And I remember I came in 2009. The industry was in complete free fall. Home prices dropped 20% from peak to trough. And we all know, we got to admit what happened at that point. Servicers couldn't handle the servicing. The big banks really failed. That created a whole new industry of non-bank servicing, Ocwins, Nation Stars, you name it, to come in so we could move troubled servicing over because it was determined they couldn't do the job. Consumers were freaking out. People weren't answering phones. Then we had the robocalling, all of that stuff. We just didn't do this very well. Like, the industry didn't do this well. Dodd-Frank gets passed. It's a massive piece of legislation, and it mandates that whoever, whether it's Richard Cordray or Joe Schmo running the CFPB, they have to implement a whole series of new rules, which were mandated by the law itself. It wasn't something where Cordray had an option to say, I'm not going to do a QM rule or a servicing standards rule or any of these number of things that they implemented. And so for the next many years, that's what his administration did. And did they apply enforcement to our industry? Depending where you can sit, you can say it was deserved or not deserved. You can say they overreacted. I was at the NBA for most of that time, and I fought against enforcement first kinds of applications. But I understand that period of time. Today, we're all abiding by these rules. We're doing the cleanest loans ever in history.
Right.
We're providing opportunities for American families. And the difference generally between Republican regimes and Democrat regimes, and this is not, don't get me involved in 10,780 votes that someone's trying to find. I would just say that the difference in general terms, and we felt this when I ran the single family business at Freddie Mac back in the late 90s and early 2000s. We thought Democrats were just better for housing, that they were more pro government's role to support more home ownership. And Republican regimes tend to be the opposite. And that's why we've seen Director Calabria as a Trump appointee and confirmed by the Senate, wanting to actually, shrink the role of the GSEs and put new capital burdens on them and release them in a structure that I think would actually be really harmful, particularly to independent mortgage bankers,
right.
Non-bank lenders. So I think brokers and IMBs in particular would not benefit by the way Mark has been rushing to try to get the GSEs out the door. So, you get benefits and drawbacks from any kind of regime. In 2009, the Democrats were not good for us. But again, that was a housing crisis brought on by subprime, no doc, Nina, Sissa, and everything else. All that stuff's out on the sidelines now. Now it's going to be about how do we get more people into homes? Let's give first-time homebuyer tax credits. Let's get out there and drive housing because it's a great shining light.
Right. And so let's shift over then. Real quick though, there was some scuttlebutt about Cordray coming back to the CFPB. Any word on that or any insights on your end? No.
Yeah, I don't. I just knowing Rich and where he is, and no one wants to do that job twice.
Probably not. Okay, so let's shift gears
having
over.
Having been through Senate confirmation once, I can tell you, you really don't want to do it again.
Let's shift over real quick, and then we'll wrap this up. But with respect to, yes, I totally agree with you. That's what we see too. Is that there certainly is going to be a push for home ownership, right, with the new administration and racial equality and those, that type of stuff. But on the lines of home ownership and first-time home buyers, that kind of a thing, just real quickly, with respect to maybe HUD has always been very anti down payment assistance program. They've always been that way. I shouldn't say always, but lately they're that way. And do you feel like HUD might soften up on that? A lot of those down payment assistance programs that were out there, they worked. They did work and they did help home buyers get in. I know we're looking at credits, but that's a lot different than down payment assistance. Any thoughts on that?
Look, you're looking at a big down payment assistance supporter, and if you look at HUD's report to Congress from first week of November, that just passed, their annual report on the MMI fund, you'll see that well over 40% of all purchase transactions had down payment assistance on them.
Wow.
It's never been that high in history. It's been steadily increasing year after year. And it tells you that in a much more diverse society that we have today, where 2/3 of all household formation over the next decade are minority, with less inherited wealth, that's a fact, that down payment becomes an even bigger barrier. It's why Biden has a plan in his housing platform to provide down payment assistance in the form of cash. I don't think that's going to happen. I don't believe Congress will ever pass his measure that he's supporting, but DPA is an alternative. So will HUD look at it in a different light? I can all but guarantee they will, and I'll tell you why. First of all, Marcia Fudge, the incoming Secretary of HUD, comes from an urban center in Ohio. In her public policy jobs before coming to Congress, she worked on housing issues. I've met plenty of people who've met with her on housing issues, particularly inner city housing, particular needs for minorities. And she's a big proponent of home ownership. But more importantly, look at the folks who have recently written stories on down payment assistance. Michael Stegman just published a piece that was in Housing Wire. Michael was at the Treasury Department and in the White House under Obama. He also served in the Clinton administration at HUD. And Michael's been clearly on the inside on providing policy advice to the Biden team. That's one. And he just wrote a big piece on down payment assistance and how important it is. Mark Zandi, chief economist at Moody's Analytics, a friend of the Biden team. He's been providing a lot of core insight to that. He just published a piece in the Washington Post in the last week talking about the importance of down payment assistance to give access to first-time home buyers. And others, I won't name names, but others who have been advising the Biden team are working on the same thing. There's a real belief now that if you're not going to give a first-time home buyer tax credit in the form that Biden's proposing, simply because it's a non-starter in Congress, how else do you get people that down payment? And the one way you do it is through DPA. And the problem with DPA, as we all know, is the traditional way of doing it, the way the housing finance agencies did it by issuing mortgage revenue bonds and selling those to raise money to provide down payment assistance. There's just not enough liquidity there. So we all know how it's being created. It's been created by, for lack of a better word, secondary marketing gains, or you can call it premium pricing. HUD's going to have to resolve that issue. But the fact of the matter is, if you can get someone into a home and they're paying 50, 75 bips, 100 bips more than current rate, but it gets them the down payment for the mortgage, and they're qualifying at that rate, you're getting someone in the wealth building opportunity over the long term. And the biggest gap between whites and blacks is the home ownership rate, and it is a huge home ownership rate. And when you look at the Census Bureau data, which I could show you a screenshot right now if you want to see it, because I just used it in another story.
We'll trust you.
Wealth in America is concentrated in housing. And so we need to be able to provide Americans the opportunity to get into a home, to begin to start creating wealth, which creates intergenerational wealth going long term, and you start to change the paradigm. So all of that is a very quick response to a much more in-depth discussion to say this stuff's going to be important to the Biden team.
I think we'll leave it at that. That was fantastic stuff. Great interview. Good news all the way around. I really appreciate you taking the time to talk to us today. And I was hoping that's what you were going to say about HUD and DPA. I really was. I'm surprised about what you said about CFPB, but I love it. And
hey, one thing, Frank. One thing that we do know, there's a rule snaking its way through HUD that the existing regime is trying to put through, which would change and tighten the DPA rules. They still have till the 20th, theoretically, to get it into the Federal Register for notice and comment. And my understanding is that's going to be difficult. I think it still sits over at OMB under review. But there is a chance we may see a last-minute Hail Mary attempt from the existing team at HUD to get that out there. I don't think that's going to be the case, and let's just wait and see what happens here.
Okay, good to know. Appreciate it. David Stevens, everybody. Appreciate you very much. Dave, thanks for being here, and we'll have you back again soon, okay?
Sounds great.
All right, guys, thanks so much. Do us a favor, leave us your comments down below, forward, share, and subscribe. You get our mobile app by doing this.
Download the National Real Estate Post mobile app today. Available on Apple Store and Google Play. Just search National Real Estate Post.